That is nuts. That is nuts.
1.6 million is how is the net revenue of Zurzuvae. 120 prescriptions were written and 50 were shipped and delivered.
It looks like it is a little bit more effective in that 2-week window. Like, let's say it's like I said, it's a smash. If it's a real smash, maybe even 25%. Hey, all, thanks for joining. So, just a brief description of this video. So, first of all, I have to give some disclaimers. I'm not a financial advisor, not financial advice. I'm just doing this as sort of a way to show you how I used to value stocks when I was working at an investment bank. My analysis could be wrong. I don't have a lot of the resources I had. There's a lot of reasons why you shouldn't just take this financial advice, but my goal is to hopefully give you this template that I have here. It's a really great template, but you can use it to actually link with everything together. So, for example, the income statement will directly link to the valuation tab. You can do a DCF here. And so once you model out how your drugs are going to be penetrating and what markets they'll be hitting, how much it's going to be, you can use all this information to find out an estimate of your price per share. And again, this model, don't use this as like a fact. It's just something to kind of think about if you're interested in a stock. I always like to take something I'm really interested in, then I'll do a really deep dive and make sure that I can actually justify that opinion.
So we'll just go ahead and get started. I just ran the screen off of E-Trade. I like E-Trade. They just have free resources for analyst coverage. I get nothing if you sign up for E-Trade, so I don't really care if you do or not. But you should be able to find just a stock screener. Yahoo Finance has one, but I don't like that they don't let you export it to Excel. I didn't try to look for another one just because this one works for me. So you just find any stock screener, and we're mainly looking for a few things. The main two things, I guess the three things. We want to make sure it's below $10 billion. That's an approximate estimate. I just selected micro, small, and mid-cap companies. Of course, those don't really mean anything. Micro can be as much as or little as somebody wants it to be. It's all kind of relative, but I try to go for the smaller ones. There's a couple reasons why we look for smaller companies first. So the first is that they're usually simpler to value. And that, like, especially biotech companies. So if you try to compare somewhere like, I don't know, one of these companies that's a pretty smaller company, and then somewhere like Pfizer has like 50, 70 programs in development, and you have to model each one of those individually. And it's kind of a huge pain. There's a lot of banks looking at it. There's a lot of interest on that name because it's a really big name. A lot of portfolios have it, so they need somebody that's always looking at it. And so like it's kind of hard to really get a lot of return from something that's already really big and that a lot of people are looking at. But in contrast, there's like certain funds that won't let you touch anything below $1 billion or 500 million or something like that. And so there's a lot of not so much as much interest, which makes it more opportunity to find something good and undervalued. At least that's the way I look at it. Maybe that's not true, but and then the other thing, like I said, these are significantly simpler to analyze. You just need to look at maybe 1 or 3 drugs versus 70 drugs. So we stick to something smaller, about less than 10 billion. For price to book, that's less than 2. So price to book, if you're not familiar, is just essentially how much cash a company has compared to how much it costs to buy the company. And we're really looking at essentially we want to know that the company still has a lot of room, that's not being overvalued, that has a lot of room for growth. So if something is not making any revenue, but they have 200 million cash and they're selling for $20 billion, that's a pretty big ratio there. So that's not going to be good because they only have 200 million cash and they're not making anything. So we'd have to justify that extra 20 billion or whatever it was. Versus if it's if they have $20 million in cash, 200 million in cash, excuse me, and they just price market cap for 200 million, that's a price to book ratio of 1. That's pretty good. So that means that there's might be an opportunity to get something undervalued there. So it's a way to kind of control value. And then of course we just look at biotech because that's what I did. That's what I did at the bank. That's just what I know. You want to kind of just work with whatever you know. And so next we're just going to look for companies, and there's not really a secret to this one. I'm kind of just letting curiosity guide me. So really what you want to look for is we want to look for a company that has the potential to be good, that we're excited about. So we're not doing the full analysis. We're not going to get all our numbers and get our exact valuation yet because we can't, it's too much effort to do that for each company. So we just want to make sure, we want to try to find a good company that we think will be pretty profitable, that we think will be a good deal. So that way we can do our analysis on it and confirm, or in some cases scenario, you'll find a company you'll really like. You'll think this drug is awesome, but then you do all the numbers out and it ends up being, not really a great deal, or you don't get that much room for growth. And so we want to spend some time here. I'm just looking for a few things. So I'm looking for that I am personally interested in the company. This is probably the most important thing. It's just like whatever kind of company. You don't want to do something that you don't really care about. You're just not going to put in as much effort. And even if that caring about is just like money, you see a lot of potential there, that's fine. But you want to at least think about something that you would enjoy looking at, or it's kind of interesting to you. I think having an idea of what you sort of know and don't know. So, for example, I'm not really super big into cancer. I'm not really big into gene therapy. My specialty at the bank was kind of like rare diseases and RNA therapeutics. So looking at those sorts of companies, those are generally some things I like to value, just because I do know that space and I do kind of know how those function. Cancer is a little bit tough. There's usually like a couple key players like Keytruda and some other like first line treatments that are just, everybody's essentially tried on those, and then there's successive second line treatments, third line treatments, and a lot of the companies are competing for that second line spot. And so I don't really look at too many cancer companies. I didn't really look at any cancer companies at the bank, so I generally try to stay away from it, but I'm open to just looking at it. So we're just looking for something. So what we're going to do is we'll just find something. We'll try Citius Pharmaceuticals. So I haven't looked at any of these before. So this will be the first time that I'm experiencing these as well. So we'll just Google Citius. We're looking for this is the website. I just Googled for Citius Pharma website. This will have all the information that we need. The websites are really great. So everyone, the main tabs we're interested in are the pipeline tab and then the investors tab. So the investors tab will have all the information we need to really get a good idea of what we're looking at. Or really, I guess the specific information that we should know that's coming up. This is good for any catalyst to see if there's a drug readout or anything. Pipeline is just good for seeing what they have in their pipeline, what they're developing. So I don't really like this website already, because usually I like it when they just have a single pipeline with all the thing. But I usually select pipeline first, so we just want to see what this company's about. Cancer immunotherapy is essentially the word that sticks out here. So this is an oncology drug. So they completed this pivotal phase 3 study. And so I should point out that it's usually the website's really good because they have up-to-date information, but oftentimes if something comes out like that day or pretty recently, that won't be reflected on the website. So you kind of got to be a little bit careful. So I'm just getting an idea of this company and kind of what things they use and what they do, what they're interested in looking at. Catheter-related infections, so they're doing infections. They kind of got like a large variety of different things. Another phase 3 trial. I don't know how I'm struck by like how kind of different everything. Yeah, they're using a stem cell therapy. They went from cancer to stem cell, using mRNA processes. So I'm a little skeptical because they're just trying like a lot of different things. Hemorrhoids. So interesting. I just get an idea of the company. I'm not right now. Actually, I'm kind of open to it. If any one of these seems like it does well, then the whole thing might do pretty well. So why not? We'll keep looking. We'll go to press releases. I want to see if there's anything kind of recent that's come out. Especially, so we're looking for some earnings dates. So it looks like they did actually do the most recent quarter. And so yeah, they say the first fiscal year quarter, which would be like September to December of last year. So they submitted a BLA, which means that they applied to make their drug to be approved in the U.S. and they're waiting for the date. So when you apply for approval of a drug, they'll give you a target date, which will be when, usually on that day, they'll announce whether or not it was approved or not. Sometimes it can be a little bit before. We're expecting Q2. Usually, with this is within like 9 months. So I'm gonna estimate it's like 9 to 12 months after the BLA. But just keeping in my in terms of that, scheduled in the phase 2 meeting, so they're going to discuss this. They don't have very much cash, but they're not really burning that much either. That's very little. So they expect the runway to occur in August. So this means that they're going to have to raise money in August. This could be an interesting one. We'll keep it on the back burner, so maybe we'll come to it. The thing is I don't really want to model out all of these very different kinds of drugs, but it might be interesting to do. It might be a good exercise. So we'll keep going just in case. We'll at least look at a few of these. We'll decide which one to look at next. So, Serious Pharma, I don't know, maybe a 7 out of 10 or something. We'll figure out something with that. Let's do Adidas medicine.
Okay, so we're looking at Pasthea Therapeutics. We're looking at this one, CNS diseases. Not really my strong suit, but it's fine. I've done some work on like ALS, MS, and stuff. We'll see. So we go to the pipeline first. So the website, the reason why we go to the website's like the best information, it's your best resource for getting started on looking at a company. Pretty much everything you need is on the website. They have like a bit nice investor relations page. So the SEC makes them have like a lot of information relevant to their company on their website. So it's a really good place to look. The first thing I usually look at is this pipeline tab. So I'm interested in just figuring out, what sort of this company is about, where they are. So this is a preclinical company. Just for that reason, I'm kind of out. I don't really want to. I want them to actually be in clinic. I just think that there's not enough data here. Maybe it's like a potential to be really good, but this once you really if they're not in clinic, there essentially becomes a science problem as opposed to like a finance problem. Essentially, like, is this going to be approved and sent to phase 1? There's no data for it. I'm not really looking forward to this one. So we're just going to move on, and that's okay. You can see that.
Oh yeah, I looked at this one before. I was just gene editing. I don't really want to. I'm not really into gene editing. It's not really my favorite thing to look at. And I think the other problem with this one is that they were going after beta thalassemia and sickle cell, which there's already treatments for that. It's like the number one thing in gene therapy, and they're still early stage. I'm not really into this one. I don't think it's a good one. So, it's just a simple reason, but if you don't want to do it, just don't analyze it. It's too much work. Life's too short. Only look at cool companies that interest you. All right, let's see. Liver Biotech company. Okay, I could do liver, although fibrosis is a tough market. There's been a lot of work that's been done on fibrosis. If they're looking at NASH, I just think it's too broad. So we're going to go to pipeline again. I like this pipeline a little bit better. It looks like we do have some liver fibrosis, some oncology stuff. This one could be interesting. I don't know. It's nothing here is saying no. The fibrosis is really difficult, but this one could be interesting. We'll keep doing some work on it. So next we'll just go to, again, news and events, press releases, same kind of thing. Top line results. Okay. That was coming from last year. So this is saying that there was a phase 2 trial. So there's a lot of information here that you could summarize. The reason why we went to news releases just to see if there's anything kind of upcoming, especially if there's any earnings that happened that day or something, and then usually not fun to look up. But usually, so what I'm looking for here is that they usually have a company presentation, which will just be the a PDF of their just recent work that I'll just have. So this is a corporate presentation. Man, but it's so That's so long ago. That might be the only one I could find, though. I'm kind of disappointed that they don't have anything more recent. And it doesn't look like they really have an upcoming investor presentation. So we're looking at this one. And this just gives you an idea. This presentation just gives you an idea of, you know, how the company thinks about their diseases, when stuff's coming out. It's kind of just a good overall way to just sort of look at things. Yeah, so we got some data coming out, which is nice. I mean, nothing here is like super pulling me off of this one. I mean, this one could be a potential one we look at too. I guess there is one thing. It's just the fact. I mean, fibrosis is just such a hard disease to treat. It's just really hard. It's a very, very high risk, potentially very high reward. We'll keep doing some work into this one. So let's look for some more.
Sage Therapeutics. I'm surprised that one's actually on this list, because I know they're pretty big, and there was a lot of hope for them. They did depression stuff, and I think they have an approved depression drug, I think. So I'm surprised why it's not selling. Yeah, so this is Zuzabay. So I'm a little curious of why this one might be a good one, actually. Let's see. So programs and research, they don't have like a pipeline, but they have a programs and research. Oh, they have pipeline. Yeah, so they have this zuranolone and approved for postpartum depression. Looks like they have a phase 3 asset and some phase 2 ones. This one could be interesting, actually. I kind of like this. I kind of like looking at this one. Let's see. So I'm going to do a little bit more work into just figuring out, because I want to know how much this thing is selling. That's my main question. So I'll go to the press releases and statements just to get more information on their most recent stuff. So it looks like they had their fourth quarter earnings, which is great. It means we got some extra information here. Oof, that is not good. That is not good. Isn't this? Oh, okay. No, that's fine. That's fine. Commercially mid-December. So it's kind of becoming a game of, we want to predict this Zurzuvae revenue. So it looks like they just came out with this mid-December. It looks like they're splitting 50% of the net revenues with Biogen. Yeah, so I was hoping to get more information from their statements of how much this is selling, but there's still not that much information. So yeah, I mean, eventually I obviously go way more into this, but I was just kind of doing something. This is something that does seem a little bit interesting. I might end up analyzing this one. They got a good healthy cash balance. So what is actually their their price to book ratio? I'm too lazy. 1.34, so it's about 2, a little bit less than 2. It kind of gotten hit the past month. These are the earnings. So the earnings weren't that good, but again, I don't think it's like you can really get anything. It became commercially available in mid-December. Everyone's like, Christmas, man. Nobody wants to try a new antidepressant. I don't know. I kind of like this one. I'm thinking about it. So what I'm going to do next is I'm gonna look at this. So a lot of the valuation will be tied up into the sales of this whatever it was called, Zurnolone. So I want to find the press release that is associated with the Biogen deal. So notice here, this is actually kind of helpful, because here they didn't say the 50% number, but I guess they reported that in the actual press release. So we're going to assume 50%.
I don't know. This is looking pretty good to me. I feel like that this might actually be a pretty good one to look at. We're gonna do a few more just to be sure though. So the next one, too early stage. I don't want to do this. So we'll do something else. Relay Therapeutics. I think I heard of them. So yeah, the main thing I'm looking for is just the pipeline. And then just some other information. Maybe kind of get the thesis behind this one. Early clinical. What is this? Is oncology. I don't really want to do this one either. I think we're really going to stick to Sage. So the reason I like Sage. So let's talk about why I'm actually going to do all this work now. I think, and this is just a first one that I had that sort of thinking about um, what to do. I like that they just approved that they just have this drug that is approved that shows that they can bring something to market, which is great. Um, it's very uncertain sales, and so that's going to be kind of a key question mark. It could be. I think it's a pretty good risk to return or risk reward problem. Pretty high risk, high reward. So it might be interesting to just look at. They do have some other late stage programs and development. I do think depression. I haven't done too much work on depression, but I do know that it is pretty profitable. So that's a plus as well. So yeah, I think we'll go ahead and just do a little bit more. So we'll go ahead and yeah, do this one. So the issue is that they have product revenue of 1.985. So that's not. They said that they only got how much was it? Half 8.8 million in collaboration revenue. The net revenue of Biogen reports for Zerve. Um, I hate having to do this, but I'm actually going to do it. So we're going to look at Biogen actually, because I want to figure out how much this is actually selling. So this is just me going over looking for Biogen. I couldn't actually find the information, so I went to their most recent quarterly earnings. I was looking for Zerve-based sales. Sometimes they'll say have like another press release. I was looking at some press releases and just trying to figure out, but I don't think they're going to report it. So we'll go back to here. I wish it wasn't so vague. Sage achieved zero point 0.8 million in collaboration revenue as of 2020 or 2030, 23. 50% of the net revenues Biogen reports for reserves a day. This is actually kind of helpful too. Um, so I'm going to go ahead and put this number in as well into my valuation sheet again. So we're going, or sorry, my revenue models. So we treated. I guess it's not really worth doing. I'll call it if we do. Oh man. So we started in December 14th, 2023. We started selling. We got 120 patients. If you just multiply 120 times 24, because they started half the year and there's 24 half, or start half the month and there's 24 half months in a year. So we're looking at at least 2,880 patients. That's pretty good. But what I really am interested in is saying, okay, I just want to know how much they're selling of this, man. They're being real cagey with it. Like, how much does this actually sell? I wonder if they have a. So we're going through all of the best. We're spending all this time now to just figure out how to best fill out this sheet. And the issue is that they're not being super upfront with straight up how much it made or how much it sold. Let me reread this again. Oh, okay, here we go, maybe.
0.8 in collaboration revenue from Zurzuvae, representing 50% of the net revenues recorded when Biogen shipped Zurzuvae to distributors. Zurzuvae net revenues in 20 for the additional effort. So that 0.8 is 1.6 million is how is the net revenue of Zurzuvae. 120 prescriptions were written and 50 were shipped and delivered. So it looks like that 50. So okay. There's some interesting things here. So we're just gonna first put 1.6 here. But the actual, we'll just fill this out normally. So we'll say that their product revenue was, well, this is really collaboration because I don't really want to do this because that is technically collaboration revenue. That's fine, but I want to know what this other sales are. I want to know where this other money's coming from. Like if it's just they should have gotten this 70 potential milestone, which I think I did see. So that's not really indicative of, we'll just do it as they did it here. They're calling this a product revenue, so we'll just go ahead and say it's a product revenue, which is fine, I guess. And what we've done is we put in all the information that we can find on the sheets into the document. And document's pretty cool because I haven't gone over it before, but I guess now is a good time to go over it. But it's linked all over the place. And so like if you update something here, so for example, I added these three main programs that they were talking about, Zuranolone, I'm not going to try to pronounce that, 718 and Sage 234. And so I just put those in the names and then the update, the balance sheet or the income statement updates because it's attached to it. I guess it is important to understand where I got that. Actually, we'll take a step back because we'll go through everything. But just as a reminder for the income statement, we made sure we checked, for example, every net loss per share, 905. We saw that over here. This is the year in 2023. So all of these line up after we add up all of this stuff together. And it's just a matter of making sure that we're putting everything in the right boxes. But the sort of difficulty of doing this in an automatic way is that like every company reports things slightly differently, and they're different enough to make it a pain that if you just tried to write a script to go and get all of these automatically, there's always a risk somebody's going to mess up. It's not going to make sense. You're going to have to end up doing this work anyway. So yeah, it's hard work, and that's why it can be rewarding as well. So anyways, I updated all of these. I found these from the company website or sec.gov. And then next, so we want to look at the valuation tab. The only thing here really it's important to know is to update here the shares fully diluted. So where we got that here. So even though these aren't, this is actually kind of, it brings up a point. I don't know if we'll talk more about this actually later, but it's kind of important to know about sort of dilution effects. So stock dilution, if you're not familiar, is just basically if you have too many outstanding shares, or you have dilutive shares, and dilutive shares are shares that become profitable, that become regular shares, or can be eligible to become regular shares when the company is profitable. And so it's kind of really, you can think about, like, read more about it. It's actually not the best description, but for our purposes, a company is worth how many pieces. Each piece of a company depends on how valuable the company is and how many pieces there are of the company. And so when the companies are profitable, they will be bigger pieces because those shares that have the option, the dilutive shares that have the option to become shares, will become shares once they are profitable. It makes financial sense. So we just account for them. So basically, what we want to look for is just dilutive. I always misspell dilutive, not dilutative. We want to look for dilutive shares. And so there are 9 million potential dilutive shares. So we want to incorporate that into our valuation here. So because when we fill this out here, even though we're saying that the dilutive share, because what the companies will usually do when the company is not profitable, all these EPSs are negative.
They're just going to report the basic and dilutive as being the same, but in reality, the number of dilutive shares, if this company were to become profitable, would be 10 million. So it's a little bit less, like 9.3. I just went ahead and added 10 here to my evaluation tab, because this will pull the most recent shares fully outstanding diluted. You got to make sure the dates and rights are stuff when you do this, but this will pull that. So we're adding that 10 million dilutive shares. Everything else fills out kind of automatically, except for coming over here. I did fill this out a little bit. So the information, this is our revenue models. We'll talk a little bit more about that, about this page, but this is a really important page. This is where a lot of the juice is. So this is the page that says, how many patients of a given disease there are, how many are diagnosed, treated, how many are inactive with the penetration. And so what they had said was, they said that there was 120. This is all from their most recent statement. So while I'm putting in these numbers, I'm like reading the documents as well too, just getting any information that I possibly can. So there's 100. Numbers are great. Any kind of number that you see, especially attached to like a sale or a drug, like 120 prescriptions, or weighted average price of $15.90. That's like really great. It's good information. So we got all this information from the most recent quarterly report, that mid-December report. There was 120 prescriptions. 50 prescriptions were delivered. I'm assuming that there's 1.6 total revenue, because they mentioned that there was a 8.8 million to Sage as due to revenue, as due to the 50% agreement. So working backwards, 1.6. So in order to figure out the total revenue for actually, I just realized I have to fix this as well. But in order to figure out the total revenue from just this 1.6, we multiplied this the price, which they had also given this. It was this 15,900 or 15,900 number. They had given that as the wholesale acquisition price. So to multiply that by 120, we'll get approximately 1.9 million. So that means that there's just like a haircut, essentially a 0.16 million. We'll call it the gross to net. So I just approximate 20%. I'm going a little bit more conservative, just because you want to always be like really kind of conservative with your models, because like you really shouldn't have a bias at all. But I kind of have a bias, just because it's like, I'm putting all this work into this company. I want it to be good so I can justify the work I did. But, you try putting conservative assumptions in, and one thing is, you put conservative assumptions in and your numbers are still like really good. Like, this tells you, wow, okay, maybe there is something here. Maybe it is undervalued, at least from the information that I believe about this company, which I'm putting into this model. That's really informative. So I'm happy with that. I want there to be a kind of a good outcome. But if all the numbers say that there's a really 10x investment or something like that, then yeah, you want to take it, or you're more likely to do it. But if you do those conservative estimates and you find out it's like about averagely priced, then maybe your biases weren't right after all. And so, just in general, try to go more conservative, because you're really trying to check yourself too. You all have like an automatic bias to think that these things will be successful. Things will kind of just work out, and so just being conservative. So we always overestimate instead of underestimate. Okay, so we determined that this is the revenue creation a year. What I realized I need to fix was that only 50% of this goes to Sage. So I'm going to go ahead and multiply this by 0.5. Bring this over. So now we got these new numbers, and then I'll go ahead and add this here. So I remind myself 50% to Biogen. Okay, so yeah, so now I'm pretty much modeling out, and this number I got of patients treated was basically just half a month times 24. So I just approximated that. This is like the worst case scenario, at least the way I'm seeing it, or not worst case scenario, but no growth. Okay, and I think that's pretty much all we had to do. I just did a basic balance sheet. We'll do a little bit more like cash analysis later, but it's not like they don't really have any debt. They just have cash. They burn some amount on R&D. It's not really, you're not going to get much, I think, from really going into the balance sheet here. And so I don't really want to honestly just waste the time with it. I just got the last quarter, mainly so we could link it to our valuation, so we could get like cash and debt and stuff. You can, if you want to, you can link it all, but like we don't know how they're going to structure their capital, because there's like two different companies almost. The one that's going on right now that's doing R&D and trying to get all this company up, and then the one that's actually going to start selling. And they're transitioning to starting to sell. But so now I'm done essentially with all the information that I can easily get from the sheets. And so now we want to start thinking about, well, let's actually fill in the rest of the sheets with the rest of the information. So, I mean, the first thing I think we really want to look at is this revenue model for zuranolone. So, this is going to be the most important part of our entire, pretty much, yeah, entire evaluation. Like, depending on how this goes, this will either, make or break our investment. So, um, the sort of strategy is we want to first check what these are, what it's treating, what it's looking to treat in the future, um, and then we want to determine where, like how many patients are being treated, what's the competition. So all of that goes into sort of this, and then finally it tells us how much revenue we have per year. So what I'm thinking we're going to do here is I think the main things we're going to be looking for is competition. They're selling this for it's labeled for schizophrenia and bipolar, but I think that the only real sorry, I got confused. This is only for postpartum depression. I was thinking of another company. So this is for postpartum depression, which is given for 14 weeks for high risk individuals, is the way I'm assuming. So I wonder if there's any competition in PPD depression. That's what we want to look for. Competition, BP depression. That's actually like kind of the most important thing, and then from there we'll study. So we just need to observe. So I don't know. I honestly don't know. We're gonna have to look this up. This will be the first thing we're gonna ask is essentially what's the treatment. So we want to think like a doctor, really. So I'm gonna go to PubMed. I'll just kind of Google PubMed. PubMed is a resource where you just get medical data, medical studies, and just kind of has a lot of medical information. So we're interested in learning from the medical side. So we'll do like postpartum depression treatment. So we're going to read this paper. So this becomes more, we're going to get really into the science now. And so what we're looking for is actually, so yeah, we'll take a step back, but hopefully this will have some of the information we need. But really the information that we kind of want, so we want to get the prevalent, we want to get how many patients a year. So we'll do like a little, I'll usually actually go out here down. So we want to do prevalence, treatment. I mean, the outcome, I kind of know, like the outcomes, it's not like a traditional disease. I think that's more well defined by physiological features. So I think that a lot of this might be just a matter of how PPD is being treated. Has an effect on 13 to 19 who newly attain motherhood. That's kind of, I don't know how many of those are severe or need treatment. So, I mean, I honestly don't know too much. I know a little bit about depression, but not so much postpartum depression. So I'm just reading up and kind of getting as much information as I can. I'm really looking for, like, it'd be nice if I just had this many people get treatment for PPD. This is what the treatment is. This is how much the treatment costs. That would be like a perfect, that would be such a great favorite. So that's the kind of information that I'm looking for now. Acute treatment. Okay, so this is great. We got a study for sertraline. So definitely sertraline seems like it'll be primary. So I think looks like the main thing we're gonna have to look at is sertraline. So we'll do a little bit more work into that. And they gave me this really nice paper, sertraline the treatment. Okay,
So we're going to take a step back. So this is what we want to compare this to. This is the sertraline. So sertraline is or Zoloft is a very, it's very common. So there's a lot of, there may not have been done an exact trial on PPD related sertraline. There might be, but what we need to know is pretty much the study. So in order to find, we go to, always forgot the name of the hit. Oh man, I have to look it up. Zuranolone. So go to the Zuranolone label. So we're looking for the label. Usually it comes out. I misspelled it. That's okay. I'll just do it here. Zuranolone label. Access. You want to look for access FDA. All right. So we're going to look for the studies here. We're looking for studies. There's a little. This is clickable. Sorry, I was looking. We're looking for studies. I forgot how they say it. It has been clinical studies. Postpartum depression. Okay. So they did two studies. Well, I'm looking for the primary endpoint is change from baseline in depressive symptoms. That's kind of. So there's a pretty big placebo effect, but it looks like there's about a 4-point change. So I'm gonna go ahead and call it a 4-point change in this HAM-D score. We'll call it 4.1. We'll be call the mean and just be more precise with it. So in this study, might have to do another. We'll do another tab. And alone studies. Okay, so we know that there's approximately, I'll say a 4.1 difference in score. Just writing stuff down. What I want to know is for this one. Yeah, this is like a different baseline. I don't know if this is. Let's see if there's another one. Trailing postpartum depression. E-scores, okay, this is great. The issue is that these are probably all on sertraline. So we don't have this paper, so I'm going to go to SciHub, which will be my nice site. I can't advise it, so don't do this, but SciHub, I'm going to use it to find a paper. It's the wrong head.
So
It looks like it is a little bit more effective in that 2-week window. So yeah, I guess it's about as effective. It seems a little bit more effective actually. Let me see if I can find another. So next, what we're going to look at is I want to see that original trial. I might have had it on this. And this is where you start getting confused because you have a lot of tabs open.
Oh, it was the zuranolone label. I want to look for if they had the number of people that were on sertraline. They did not. Okay. So I'm looking for when they actually talk about this data, they should be a readout, but they just don't have it, and I think that's because they just became public, I guess. I just want to figure out how many of these people are they effectively going for first or second line, and how many people in this trial that they had were on a medicine. That's all I'm looking for. And they have to show it somewhere. I just need to find it. I just wish they would give it to me. A lot of it is just I'm looking for a very specific piece of information. So, yeah, this is annoying. Maybe I'll go into the CNS days. I think I tried to look at that. Nah, never mind. That's not a presentation. So yeah, I guess it's the only. So I'm just reading again. As much information. This is the name of the game. I'm reading just scientific papers. I'm trying to find information on, how good is this drug? What's up with it? What do similar drugs sell for? Just as much information as I can. And all of this is kind of going to go together into sort of my actual estimations. But right now, it's just reading tons of stuff. So yeah, it looks like the only other one is this prednisone that's approved for the PPD specifically. I think the fact that it can be used as other ones is pretty good. I just really want to know how many people were on the sertraline when I just want this paper, man. That's a huge pain. I don't believe I should even have to pay for it just because I know that this is gonna be publicly available somewhere. I'm just gonna do a search on zuranolone just to see how common it is recently. 40 papers in 2023. Let me see some stuff from 2024. I'm gonna read. How much is this? So this is saying, I wonder how much of this other one that we found out that also is sold. So I wonder what the sales of that are. Who owns this? So who sells this? Oh, this is by Sage too. Okay. Huh. Oh, so the rest of, man, that was way too hard to figure out. So the rest of that is Sage 2, which means that's not good actually. The reason it's not good is because I mean this thing has been out since 2019 and the sales are nothing. I was hoping that like there would be some kind of big sales from postpartum depression. This is really not good because it's hard for me to compare this now. I thought not that hard to compare, but it's just like they're getting no sales of this. They're getting nothing from this. And so why would like the upgrade get that much more? You know? So that's actually really concerning. Let me finish reading this that's actually really damning. Yeah, like I said, I mean, they were selling this thing since at least 2019. and it's not having sales. So like, what's the I just if the original isn't doing that great, what's the reason to think that the upgrade is going to do good? Let me do this. Let me look for so I look for Zuranolone. I'm gonna look for what was it called? Brelexanolone. How many articles? I mean, so yeah, I'm just reading about this previous drug. We're gonna go to Google Trends. This one's not scientific, but it's always kind of just nice to get a sort of gauge for how much of this is actually being like how popular something is to talk about. The past 5 years. Huge spike when it got approved, and then nothing. Huge spike when it got approved, and then nothing. That's whew. It's more than I mean, but after that, some people looking for the earnings. Let me do something. Let me try to compare this with like something else. I know setmelanotide. Yeah, that's kind of like more. Oh man, let's do something like. I honestly don't know what to think about this. So again, the issue is that I don't think it's that particularly better than Zoloft, and it's hard to find this information, of course, and maybe that's why because it's not good. Um, so I have a hard time. I don't know if it's actually better. Like, it's not significantly better, I would say, than Zoloft, especially because you can just stay on Zoloft and it's fine. Maybe it's the only one that's like FDA approved. Well, it's not because they have their other ones. And I was really hoping or thinking that like if there was a very severe case of PPD, then you would think about applying this thing that takes like an inpatient stay. There's just no sales for this Brelexolone stuff. Like there's nothing for it. And then all similar gauges of interest from PubMed, like it doesn't seem like there's a significant amount of interest about this new Zuranolone alone. Although, hold on, we got 40 in 2023. We're only in the first month of 2024, so maybe there's some hope. What was the other one? So after it got approved, there was like, I mean, yeah, there's already more, so maybe there's more interest for this one. Twice as much interest. I still don't know how treatment of postpartum depression. I don't know how many people are treated for this stuff. Percent of postpartum depression treated. So I'm just trying to get an information on how many mothers will be on antidepressants right now while they're nursing. Yeah, I don't know. I'm kind of bummed because I suddenly have a bad feeling about this product, and I don't think it's gonna sell. You gotta wonder why nobody's bought it. Well, I guess and then Biogen has it, but like Biogen isn't even reporting it. Let's see. Does Biogen even? I don't even think they like talk about this at all. Did they have a conference call? Nope. I don't think they really care about this at all. So I'm not feeling so great about this one anymore. We'll keep going. It might be I mean, I was gonna say it might be a short, but it's not because it's already trading so cheap. I don't really trust that it's gonna go down. I don't think it's gonna go below cash, so I don't think that there's that much. But man, I am not feeling good about this drug. I wonder how much. I mean, I was gonna say, I wonder how much they're selling of the original drug, but it doesn't even matter, man. They're selling it for $1 million. Like, that's nothing. Again, this is not financial advice. Maybe this is a great company. You should buy it because I'm dumb and I missed something. But man, the sales are just not there. Biogen doesn't care, man. Oh. All right, maybe there's hope for their. Let's see their other program. We'll go to their. How much? So after every earnings, there's a Q&A by the analysts that asks the management question. I think this is a really valuable question, place to get some info, what other analysts are thinking. And I just recorded my responses to the questions. So they're saying that they're not, that the 120 patients, they're not going to really provide much more data about that. That's all. There's not, so we can't really get information from those patients. That one was just saying, like, basically they're going for first line treatment for MDD, which makes sense. The only other alternative is theirs. So it's like, of course, they're just going to go to their more efficient, cheaper one. So it's really not something. So that question was about the essential tumor, the 342 program, which is the third program. So the last approved drug for that was a while ago, is what they said. And then, I mean, obviously they gave the company, they think it's going to do great, whatever. But that question just, they pretty much, well, echoed a lot of the concerns that I had. They said a lot of investors were concerned, the analysts said a lot of investors were concerned that there wasn't enough momentum going forward. She also mentioned that their OBGYN, that a lot of the OBGYNs that prescribe aren't even aware that it exists. So there's a lot of doctors that are prescribing this that aren't aware that it exists. And they kind of came back with the cookie cutter answer. But I think it kind of goes to show that we're thinking the same thing as a lot of the analysts on pretty much the sales of this thing. So that one, they were basically wondering because I have a free drug program and they're giving out the 120. That one is actually okay. Let's take a step back. So that one was a good question because it solidified that the revenues were recorded at the time that it was sent to the pharmacy. It's the pharmacy. So once these prescriptions are written, they recognize the revenue for their portion. So that was good because it kind of had to be that way because I had modeled it here, and I probably should have checked that before I just decided to do it. But what I did is I saw, okay, if it was they gave us the exact amount that they sold it for, 15,900. If it's 120 prescriptions times this, or if and they also said 50 prescriptions delivered. And I was wondering when they recognized the revenue for that, because if they recognized when it was delivered, you would have to do 50 times
15,000 to get the actual total revenue. But if you did when it's just written, then you would do 120 times 1,500. If you did it by 50, you're not going to get it. You're only going to get not even 0.8 million, which was supposed to be the whole thing. So but when you did it by 120, see the 120 times the price that they paid for the drug, you get 1.9, which is you take a haircut from there to get your you get your whatever you divide in half to get your 8 million. So that was kind of the rationale for what I saw, like how I calculated that. And so I kind of already, I figure it had to be, revenue had to be recognized when they deliver their drug. Or sorry, when I realized it had to be when they wrote a prescription, because it couldn't be when they delivered because there wasn't enough money there. But it was good to just explicitly hear that, so now I don't have to think about it too much. So that one, it kind of just I was feeling a little bit hopeful again, but then I kind of just got brought down because it was talking about pretty much just getting people to subscribe or to get prescribed, which physicians they use to prescribe. So they're looking at Salesforce targeting primary care, psychiatry, and OBGYN. And it concerned me because it just like made me remember that like all this is focused on PPD and no mention of major depressive disorder. So it's just like severely limiting, I think, because I don't know. Um, the there seems to be a lot of questions about the payer dynamics. So who's paying for the drug and their free drug program? I think a lot of interest is figuring out sort of their payer mix and what the conversation with insurance is looking like. So they just mentioned that they weren't thinking about it like a chronic treatment, but rather a one-time thing. Which again, it goes against the sort of treatment for major depressive disorder. My fear is that like the worst case scenario is like, let's say there is a magic treatment that you could take for depression once and then just have a better depression, like, or have better depression symptoms, less depression symptoms, score higher on whatever psychiatric test. Like, let's say that was a thing and it was just real and it was good. What do people think about prescribing that over Zoloft? What kind of data would you have to see? Because Zoloft is like pretty widely prescribed, man. Like, let's see, Zoloft prescriptions a year. It's like you're not competing against nothing. 39 million in the US. That is nuts. That is nuts. You got to compete with that for major depressive disorder and for PPD. It's used off label for it, I'm sure more. So that one was pretty insightful because I had been thinking about this, maybe not entirely correct, and now I'm even more skeptical of the other stuff. That was is the cognitive dysfunction. So that's what it's treating. It's treating cognitive dysfunction because I was thinking like other stuff will treat like mortality or they'll treat like tremors or something, or even there's other things that you can treat as part of these neurodegenerative disorders, but they're treating specifically cognitive dysfunction. That seems such a weird thing to go for. Like, I don't know, it's just kind of weird. Oh shit! Did I leave this on? I think I just want to leave this. The question was about other vendors like IQVIA, so they offer like prescription services. If I was at the bank, I did have access to using them. I don't really have it now. That's fine. We'll live. Obviously, be better with it. It's expensive. I don't really want to get it. But they're saying that the scripts should track pretty closely. So, but really just standard stuff. There wasn't anything that they really started supporting. So that question was, oh, I'm going crazy thinking about zuranolone. So that question was on. I mean, they pretty much didn't say anything. They were talking about essentially how many of the patients were on the free drug program. But what he said was interesting. The CEO said, um, it takes 24 to 48 hours to get them this drug. That seems like a long time. Like if somebody's coming to you because they're depressed, I mean, maybe it's not like so long. I guess that's fine. My guess was just, I guess it is like a novel structure. I wanted to see that like what it was. I guess it's significantly more complicated than, well, I think it's like, is sertraline kind of similar? Not really. Yeah, sertraline's a lot more simple, I think. This is really not like super quantitative what I'm doing right now, but I'm just trying to like make sense of how hard this is to make. So there's a lot of drugs that will have a similar like profile. Like this is a SSRI. So if we look at serotonin, like serotonin here and sertraline here. I guess they're not really that similar. I thought they would be more similar, but the fact that this is like a steroid, though, in general, yeah, this would be like kind of harder to make than some other stuff. 2 or 3 days, or 24 to 48 hours. I dumbed out of that question. I think it was just corpo stuff. So they're still in the middle of the question, but one thing he reemphasized is that they estimate there's 500,000 patients a year for this, for PPD. We just looked at 40 million prescriptions from sertraline from Zoloft. That's a pretty big difference. Like, while the rest of that was going on, I was looking at another report from Morgan Stanley. So I went to E-Trade. They have the analyst reports there. I just grabbed. You can use your bank, whatever you use for investment. They might have analyst research. They didn't come out with the earnings today, but they were talking about how last time they took out when they got the CRL, the complete response letter, denying the drug. They talked about how they took it out from their model, MDD from their model at all. So this company is going to be really hard to actually study because none of what they're doing is like normal. Like they're looking at cognitive impairment, so they made a new endpoint for their other study. So there's not really that good of a comparison. There's no approved drugs for that. So let me get this timeline straight, though. I need to go back. So we're going to start modeling their R&D expenses because now that I have a good picture of all of them, I'm still just thinking about how to do this. Other programs. So this is what I'm looking for here. So they're going to be ramping up a little bit in 2024, and then I can just honestly dash it from there. So it should be pretty. It's like mostly weighted towards maybe the middle. It's this part's really difficult because it's kind of hard to just get a gauge for all of this. You know what I can do though? I'll look at like last. Okay, so maybe I can use this. So here it looks like what I was trying to do is kind of link their past year's R&D spending to their current year. So I put in some stuff just as a placeholder. I just was kind of wanted to do a quick back of the envelope calculation, but we'll be a little bit more specific now. So it looks like last year in 2023, they had 90, 93, 97, 102, and 64. So peak of the third quarter and then a big drop off. I think they were finishing these studies and then dropping off. So they'll probably end up ramping up again for this. So it'll probably be like a little bit less than this, I think. So we'll go ahead and call it like, I think they're gonna go. Maybe something like that. Because I'm figuring that they're gonna peak in the middle of the year. They're winding down trials and they're ramping up trials kind of the same time next year. So it's maybe something like that. And then yeah, I think this just drops off a cliff to be honest. Because here's what we're assuming: we're not assuming what they're actually maybe going to spend. That's not the right way to think about this. I think the right way to think about this is because these are very very uncertain cash flows. So how we want to think about these, we want to say um, instead of modeling out and like trying to estimate exactly how much this is going to be like if they continue development, we're essentially going to say they're going to do their commitments, their trials that they're already running, because they can't just stop the trial. Once you enroll somebody, you have to like legally finish the trial, unless the government tells you not to. Like, you can't just stop a trial. So that money's spent. They're not going to recognize it until later, until when it's actually spent, until later in the quarter. So we're pretty much assuming that all their studies are just going to go through, and then they're going to stop and evaluate the next decision from there. And so what's likely really going to happen is this wouldn't happen because we're going to model what's going to end up being like, like we said, the main drug Zol whatever was being depreciated or not being studied anymore, but they're ramping up the other studies. But I think still overall it's going to be lower, and then we're going to drop off a cliff. And let's say all those studies failed, they probably would just try something else. So they would try to find a way to spend the money, but we're just modeling it away so we can see what is it worth today. So theoretically, if they did that, you could withdraw your money in 2 years or whatever. But we want to value what is it today. So it's a little bit unrealistic to think that the R&D spending will just fall off a cliff like that. But the reason we do it is because we could take the money and do something else. And so this is kind of a way to adjust that to find the compensation that's already been spent. SG&A is a tricky one. So this will usually just rise up a little bit per year. It looks like we have a big amount in the last quarter, but usually like see every single quarter has been rising. If it was down this one, I think they did a layoff, and that was this huge difference right here. So we'll go ahead. Well, actually,
I think that's what they had here. I think it was a financial business update. This happened like the day after they got denied or for the major depressive disorder. Financial update. I think they're gonna say so yeah, I laid off 40%. So that's a pretty big haircut there. So maybe I even go down a little bit more on this R&D. 40% is a lot, but that's what they were spending here. No, I think I keep it. Um, SG&A will just be kind of, you see how it just kind of goes up. It went up by maybe like 8, 6, -1, 10, 3, call it 4. So we'll do like 59. We'll do like 64. It's not really 66, 60. I'll give them the benefit of the doubt. It's not really super. It's not a really easy way to kind of to quantify either one of these. Like I said, I think the way you just kind of have to take a gut feeling, and because there's a certain amount that, and after you see enough of these, you got to get a sense of how much a phase 2 is, how much a phase 3 is. It depends also like on trial length, on the cost of the drug to get to make it, the company itself. Obviously, there's a big layoff here, and so there's a lot. You can't really just plug it into a formula. You just kind of have to think about it and take your best estimate because the modeling is like a game of estimations and mistakes, and it's just you just have to estimate the best you can, and hopefully you get something closer to being right. Okay, so that's that. We'll go ahead and model out these ones too. Um, we'll just call it like 61. I'm just raising this. It's actually not that, not raising it that much. So I'll just say like 69, 61.2, 61.4, 61.6. You have to do technically the weighted outstanding average shares. I don't really want to do that. It's going to be too much work. I'm kind of lazy. It won't really matter. It does matter. I should do it, but I'm not going to because I'm tired and it's late at night and there's other things I want to do. So that's the thing is you can always just do more. You can always just do better. There's always more things to do to look up. But at the end of the day, like that, this being closer to point 0.2 or point 0.3 is not going to be the difference between. It's not going to be the difference between whether or not I buy the stock. So like, I'm not going to worry about it too much. I gotta say, man, I'm not really super confident in this though. So, oh man. So now that we updated the R&D and we went over just the thought process behind those. So yeah, SG&A will always just kind of rise a little bit. Um, it's just kind of like new secretary, stock-based, that's not sorry, it's not stock-based compensation. R&D kind of goes with the phase of the trial. Right now we're worth a whopping -$16 a share, but we haven't really modeled anything out. These both can't be. I'm just gonna go with 20 for now, like maybe even 15. It's just rough, man. It's a rough life. We'll give them the benefit of the doubt. We'll say 500,000. Usually I try to look this up a little bit better, but I just don't think this is really gonna matter because let's assume
Like I'm gonna give this company all of the benefits of the doubt. So that's just gonna kind of be my approach now. And knowing that, we're gonna see if it's still worth and what is be feasible for like the best case scenario. So it's like the percent of people with depression treated. 34%. We'll call it 35%. I mean, again, we'll just call it that. So 0.35 times that. And the thing is actually, this is a good point. I don't think that they prescribe the antidepressants as much in the US as they do in Europe. Yeah. So again, let's just do the worst case scenario. Let's get this done modeled out. This is not even millions. This is a number of patients. So let's do a percent penetration. So if there's 175% patients and 208,080 of them, we'll call it 3,000. %. That's actually not as bad as I thought it would be. So they have a 2% penetration right now? So I'm raising that. So now we're saying that there's. So what happens if they just steadily increase their penetration? Okay, so just to refresh, we're just doing some pretty quick calculation here. You can go as again. You can always go more in detail if you really want to. So, assuming about 35% of them get treated, and we estimate a growing 0.5%, which is really not that much. You get that much. And now it should be linked on our sheet, unless we didn't do it correctly. Oh, no, it's here. So now we have this side of the equation, which is the latter years of where it'll actually end up. So now we'll add in that. So we were just continuing this shares outstanding. We're going to add now 10 to it. So we got 71 plus 10, 81. And we'll just keep going up by the same rate. So 82, 83, 85, 87, 89, 91. All right. Still strongly negative. I mean, I'm really trying here. Like, in order for this to make an impact, what would the penetration have to be? So let's say like they have a huge, just becomes a household name by 2030. Literally half of the people with treatment for postpartum depression are using this. And this one's even more than half. It's $600 million a year. And it's still kind of shit. Let me go a little bit more. Let's go this way. Okay, that's better. So we're gonna do that. Okay, so I made a couple changes. Well, first of all, I fixed some formulas. Always be watching because it's really easy to like when you add rows and take away rows, add programs, add information. It's really easy to just lose track of things. So you always gotta be checking. So I updated my valuation to pull all of these numbers that we're estimating. So I'm assuming I'm assuming that they're going to be pretty successful here. That's a 35% penetration by 2035. A third of the patients with PPD that are getting treatment for it are getting treated for it. I think that that's pretty moderately successful. So I'm going to call that as, being the sort of base case. Assuming 2 to 35%, same, just keeping this all equal just for simplicity. Normally you could do like a population escalator here, but I'm already I feel like giving them a lot, and I don't want to give even more. But as you can see, we're still at only $7 a share. We haven't included the other stuff, but I'm not super convinced that this is end up going to be working out. We still gotta adjust this will make a pretty big difference depending on the discount rate and stuff we use. So it's, makes a pretty big difference. But I think that pretty typical stuff, and it's still not, like if this was a really good buy, if I was really excited about this would be a very strong buy. Like I would have, more feelings about it, but I honestly don't see it being as strong as I want it to be. It's just a little disappointing, but so yeah, I'll probably do some more work on this later, maybe tomorrow or something, but that might be it for me tonight. Yeah, so I'm looking up. I was doing some more digging about this other drug, the one for the cognitive impairment in Parkinson's and Huntington's disease. So I was looking up like cognitive. And my keyboard worked. My keyboard's not working. Okay, weird. Cognitive impairment in Huntington's disease. So yeah, there's not really. So I'm looking up treatment of Parkinson's. That was actually the right one. So it looks like there's a lot of stuff that might have. I wonder how long ago. I want to see how long ago this was. This was last year. It doesn't look like they're treated that commonly. So only with related to dementia, but not specifically Parkinson's disease. This is kind of confusing the way they're writing this, but at 5 years, the risk of dementia is 6.5 times higher likely in those with cognitive impairment, mild cognitive impairment. So they're treating it like the same disease. So what Sage is doing is that they're going this paper is pretty much saying that you start out with MCI, mild cognitive impairment, and when you have this mild cognitive impairment, your risk of dementia is 6.5 times higher. So there's a pretty strong link there. But Sage is trying to really just target the mild cognitive impairment class. So I think I'm just going to model out dementia because I mean, from looking at this, and maybe I should do more research about this, but it seems like we're essentially just looking for dementia. I think it's just a matter because you can't really diagnose dementia easily. So I think it's just like all dementia. Maybe that's not the right way to work at it, but I think it starts as cognitive impairment. 2 and 4, systematic. Yes, is what I want. The prevalence of Parkinson's. Please just have this paper. Oh, looks like it's behind the paywall. No, can you just give me the number, please? We'll just call it 25%. So the absence of in subjects 65 or older. So we'll just call it. Well, that's PPD, TDD. Yeah, I think that's part of what they're doing. They're trying to not go after the actual dementia, but you know, you want to go earlier because it's harder to make an impact actually when their brain is already gone. Percentage of PDD. Again, we got confused. PPD, postpartum depression, and Parkinson's disorder, dementia, Parkinson's disease, dementia. We'll just call it 5%. So we'll just go to the upper bound of this one. Same story of number of Americans did about 65%. 58. So we'll call it 58 million. The reason we're doing a U.S. and a European model separately is because the dynamics will usually change a lot. So they definitely won't charge this much, 1,500, 1,900. Usually it's around 80%, or sorry, 20% of what they charge for America they sell in Europe. So it's a significant chop off. Can be like a little bit more, like up to 50%, but usually a good bout of it is gone. Not 80%, sorry, I'm going the other way. It's about 60%. 60% of, but it's still just like a significant amount. You can't just use the same model. So I'm not even modeling out Europe because, really, honestly, to be honest, if it doesn't work in the US, it's not going to work in Europe. And Europeans usually don't prescribe as much antidepressants as America. We'll take a step back. So this is, we were saying this was 58 million, so we'll call it 58 million times 0.005%. So that would be 300,000. So diagnosed treated patients would be, I mean, we'll just call it 50 for now. I just want to do some back of the envelope stuff and start putting this in there and then maybe check on each assumption individually. Let's call it even a 1%. A 1% penetration. I just kind of curious. Patients treated. I gotta charge my phone, my headphones. So I'm gonna be. All right, y'all. So good morning. I did a little bit more work on this. Oops. And I kind of just finished it up. So I was looking at these other two models, the other two programs. There's a couple things that I've changed from the last time. I remember that this wasn't just going to come out in 2024. Like these are in phase two trials, so it might take a while. Giving them towards the end of 2025 and a 5% in 2026 for this Dilazimor, which is related to the cognitive impairment of Huntington's disease and Parkinson's. I just modeled the Parkinson's here. You could actually lever that up a little bit. I'm just kind of interested in the base case scenario. I'm assuming that they're only going to get treatment for one, and this is a very high risk, high reward program, which we'll talk a little bit more in a second. But I do think eventually we'll get to $1 billion sales. Um, I put this $20,000. I just made it kind of similar to this one. I figured that they could price it a little bit higher due to sort of the mortality associated. I think that there's a higher burden associated with cognitive decline. And I think that there's actually a pretty big population. So the difficulty with cognitive decline here is that um, it'll eventually lead to dementia. So it's hard to kind of screen for that. There's not really ways to check for dementia or memory loss because especially it's like someone's bright before, but then they're just slightly not as bright. Like they're not going to get caught. Um, and then by the time it really starts to become noticeable, it might already be too far progressed into the disease for effective treatment. So that's going to be an issue. But that's just things I'm kind of thinking about. I do think it could sell a lot. There are some treatments for it, but there's not. There could be room for other ones. So I'm being pretty um, generous. I think giving them a 50% peak sales in 2035. So saying pretty much, if you know somebody with Parkinson's and memory loss, and they get treatment, then just sorry to be this deal is more. So that's what we're saying in 2035. That's a pretty broad estimation. We're doing the same thing here to peak sales 50% in 2035 for SAGE 324, which is related to essential tremors, and so that's just the tremors associated with Parkinson's disease. And this one was actually interesting. Like I said, there's a lot of patients, and they 60% of or around this many patients. I just looked at some random, not necessarily random, but PubMed articles. This was a good one, which I think this is one of them. Yeah, this is talking about the medication usage. There's another one for the actual numbers, but just looking at medical literature, just trying to find out, how many patients there are, how many of them. A lot of them take a lot of different medications. For example, like 30% had taken over 4 medications, so that's a lot. That means that tells me that there's a lot of room for this market for some unmet needs. So definitely, I see if this becomes an approved drug, that it could be up to 50% of people that at least try it at some point. So that's yeah, that's kind of my rationale. That would lead to a $3 billion yearly drug. I don't remember if I changed much on this one, but yeah, just our overall assumptions from number of patients to diagnosed patients. Um, Weighted average physicians cost 20% gross to net in the Biogen. Um, I forgot what else I had worked on, so I'll kind of just go over the whole thing again. So we plugged in these numbers are all pulled from the revenue models that we just looked at, and then from here we have like the probability of success for each target. And this is the subjective part, and so you can kind of change this. This is the price per share down here. So if we change this to, I don't know, let's call it 10%. So you believe it's 10% like it, anything that's worth 25% per share. So this is $25 a share. So 10. So yeah, I have put Zuranolone. I mean, it's already approved, so it's just going to sell. It's just a question of how much it's selling. This is saying that it's going to probably sell. Peak sales of 365 million. That, to be honest, seems kind of right. I don't see this being $1 billion drug. It just doesn't give me that feeling. So that's kind of what I think it's going to get to. I put it as a 1 for collaboration revenues. These are linked to the income statement, just because they have some of that other drug that they're still selling, and there's some miscellaneous stuff. So I just kind of count for that. I think that the other drug I think is like a little bit faster acting or something. I think it's like slightly more effective in some ways. So I think for very severe, when they're in the hospital, the key is that they have to be in the hospital to get that treatment. It's like a 60-hour infusion treatment, which is kind of a pain. But I think if they're like a severe depression and they're in the hospital for that, it could be used. So I think that there still is a room for that. Probably at least maybe get a couple million a year, but we'll see. If I'm wrong, it's not like the worst thing in the world to be wrong about, I think. Yeah, so I'm modeling out cost of sales around 25%. So when we looked at their cost per sales, the percent, it was around 30% of revenue in Q3, 40% of revenue in Q4. So I'm being pretty generous by just giving it to the 25%. That's already just something to recognize. But I think that they'll probably go closer to this way. Um, this was kind of due to a first launch, so it's going to be more than expected. This will probably be closer to like, I mean, the first quarter. So yeah, I'll just go ahead and model it the first quarter. I think the first quarter would be like, um, I don't know, we'll call it. How do I do it this way? I'll just do it down here. So instead of 25%, probably be like 35. So 30.30. Yeah, okay. 30. I'll do like 40, 35, 30. 30, 25. And this will change the actual percentage, but that's just how I'm thinking about it. I did actually just go ahead and model out the 2024 based on sort of the revenue model and approaches and stuff. Just because I wasn't to see some back of the envelope calculation of what it was going to look like. But I'm going to fill out these detailed ones. It probably won't change that much. But so what the cost sales is 0 because this is calculating an average. Okay. Finish that. Okay. Yeah, so there's back to 25. Okay, cool. So on this side of the equation, the income statement will get, or the COGS will just pull from the income statement. So we would put 25 there, but on this part, we're actually calculating out the COGS based on the percent. So we just change this percent. Let's say we change the percent to 30, then the COGS becomes increases, and that makes our stock go down. So I'm having them go down to like 15% COGS. I think that's fair. I mean, that's still, again, that's like pretty good. I'm being really considerate or generous of myself on these COGS. Like I could charge them a lot more, but I think I'll just leave it. So they R&D will kind of drop off. They're going to finish their trials, and then I'm assuming again that they're just not going to do anything after that. They kind of have an optimal use of money. I could lower this actually. I think I'm going to go ahead and lower this because they're not going to be spending, especially 180. I actually think I can really like slash this because I don't really see them spending, like having to spend, I guess. If you get this Parkinson stuff out the door, then you just sell this asset. Even if you decide to do like other things, you got to like contribute other ways to the model. So I'm happy just like slashing this. Giving them, that was a pretty big boost. I was even thinking about cutting this SG&A too. I think I might. So recently they had this restructuring, this layoff. So and that was in Q. This is between Q4, Q3, and Q3. So before the SG&A was 78, now it's 55. So I just put this as like a little bit up. I could cut how much I'm actually increasing this by. I think I will. I don't know how conservative they're going to be with their SG&A though. It's kind of the issue. I'll just leave it. I'll leave it, but I'll cut this a little bit more. I think I can cut this. Will the SG&A go down is the question. So on one hand, like when you have SG&A is like selling general administration, you have the drug, you need to sell it. So that usually like it doesn't drop off like R&D does. You'll usually have to like keep selling things. So that's what I'm thinking about for one. So I don't want to cut it too much. What happens if I just hold it flat? I think maybe that's the play. It's a lot. That's 240 million. What are they spending that on? For a company with, I don't know, 200 employees? It's like $1 million per employee. What are you spending that on? could look up the sheets and find that out, but it's honestly, I don't know. I think this company is gonna have to really focus on just being very lean with cash, which is a very different mindset from what they have been. Because I know that they were like a huge growth company. I don't know if they're going to do that. It seems like I feel like they're not, and that's maybe not even the wrong decision. But you have to, I think, get some other assets or somehow increase the probability of these other programs, make investors feel more certain in those, and then really execute like really well on the Zerina sales. I'm gonna go ahead and cut. I'll keep this. I just want to see what happens. So I'm just gonna see what happens when I just say it's a 240, 240, 240, 240. 240. I can update that sheet. I'll probably will do it right now, but I want to just see this. So I mean, we get a little bit more price, but again, like, see, I'm giving them all these breaks, and I don't see a real like. Nothing is like, whoa, okay. Like I don't know. I'm assuming that they're going to hit 50% penetration in those side programs if they hit. I could increase those percentages a lot, and I think that's where the key driver is. So I think it really comes down to, because if I had this here, I was giving them a lot of breaks financially. I don't know if they're going to perform that well. So if I really increase my probabilities of success, then that goes up a lot. The other part of what I was doing is also the sum of the parts valuation. So we also have from the peak sales year. This is just like a multiple approach. So we just find the most the year that sells most. Usually, the last year it sold. Excuse me. So this is valuing most of the value is coming from this Zerina, and they had $10 of cash per share. So I don't think it's gonna go below cash. So that's sort of the lower limit. But I mean, even the cash combined with Zerina, so the lower limit's got to be even higher than that. This is valuing at 27 a share. So I mean, yeah. So the real numbers that you like, this is the sort of number, the valuation for this top part, and this is the one for the bottom part is over here. And you don't really want to like, I don't look at those numbers and be like, that's the specific number. So eventually, if I decide to take a position, that I would look at that number and set like a sale based on that number. But here, like, I'm not gonna say it's worth 27 versus 24 versus 20 versus whatever. The price right now is around. Actually, good point. I'll look that up. Um, so it's $22 a share. Yeah, I just am not. I'm not convinced. I think that that's pretty much all the work I'm gonna do. I don't really want to do any more work on this company just because I could fill out these quarterlies, which I'm not gonna do because I don't think it's worth it. It's not gonna make a difference. So usually I would do that. What else? Here's the thing. Yeah. So we're talking about all the things I would do if I cared more about this company. I thought it had more potential. I'm not going to spend again more time just looking into it because I don't think it's not something that I'm personally interested in anymore. I'll keep an eye on it. Now I know the name, so now it's like if I see it trading for a huge discount or see it goes up a lot, and I don't think that it has that value. I kind of get an idea for their programs and their price right now, so it's not a waste. It's just that's kind of yeah. I'm not really going to make any more effort, but I could be a little bit more specific with these. I could definitely expand this one to include the Huntington's disease. That's going to be really hard. They would have to have a label for both of those, both the Huntington's disease and the Parkinson's. So that's going to be difficult. I could give them more benefit of the doubt on the Zerina. I just don't think it's going to be there. definitely the probability. So, like I said, those are the big two ones that you could really change. If I was going to do more work. So, I mean, here's the thing: is like I could do more work onto whether or not these drugs will be approved and the sort of probability and likelihood. And either way, I would do that is like look at the treatment, look at their effect, look at any of their trials. And I probably should do that to get a better idea for how this. You know what? I'll go ahead and do it now that I talked myself into it. So what we want to do is we want to look at the So I think that there's just not enough information to tell how good these other programs are, and that's why I have it. I mean, I can't really justify putting it more than 4%, especially if I'm giving them that much. If I'm saying it's going to be $1 billion drug. At the same time, like I'm starting to think about it. Like I don't know, they brought this other drug to trial for a new indication. Their business strategy is really interesting to me because basically they're saying that they're going to target these things that technically the FDA doesn't have a lot of treatments for, and that would be things like postpartum depression or the cognitive impairment due to Parkinson's or Huntington's disease. Um, but those are kind of treated off the label for a lot of things. And so I wonder, because my first thing is, maybe they're just being too broad and they should just try to go for something more standard, like Um, they tried the major depressive disorder. I guess it didn't work, but like they're going to phase two trials for all of these. If they get a hit between the Huntington's disease or the Parkinson's, and they get a good lead on that, that doubles it to. Let's see if they get like some smashing phase two. I would say it's like 20% chance. Because you always got to just learn something, but that would be worth like 30 bucks per share. Like that, if I was 20% confident in that drug, I would consider, buying stock. So I think that's really the key thing I'm looking at. I think it's even more like the Zurzuvae alone's kind of a wash at this point. Like you got to see the value in these other ones, and I think it's the 718 because it's the most. Yeah, so we're expecting the top line data in early 2024. Let's go ahead and just look at this phase one data. Can we find this? So I'm gonna look for this phase one data. I want to see the data behind this. So I'm looking for just the data that's in that phase one that they did on this. They don't even talk about it. So now I'm looking for anything I can about the timings of when this phase two for this 713 is going to come out. That'll be a pretty big catalyst, and I wonder if there's just some information. There probably is, so I just got to find it. They said early Q1 or Q2. But that's the kind of the thing. But we can kind of calculate it if we look at the. I want to know when the enrollment was complete because if I know when the enrollment is complete, I can know like when the last patient was studied. If I know how long the trial is, then I can get pretty close to knowing exactly when they're actually going to release it. So we're looking for the last. We're looking for them to say enrollment complete in phase one. Blah 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 blah. Oh, they don't have that press release. These are. I want to get a press release. Where are the press releases? Press release. Um, so I guess I'll do this one. So it's 42 days. The study is 42 days, so we need to figure out when they enrolled. Progress recruitment ongoing. So they're still recruiting here, and this is in August of 2023. So it has to be after August of 2023. Are they still recruiting here? Yeah, okay, so they're still recruiting in Q3. Oops. Yeah, so they don't really say. I bet you they said something at JP Morgan. Let me see. So JP Morgan's a big conference. You always want to look at JPM like data if they have it. They'll always have like a presentation. It's the biggest biotech event of the year. I wanted to go, but it was during COVID. I couldn't go. They had it and then they canceled it. It was very aggravating. I was very upset. Not much you can do about it though. I don't even know if they say it's completed. They haven't said they. I actually don't even know if it's completed right now. If it's still recruiting, I mean, like they haven't actually said that it is not recruiting, that it is done recruiting. I don't. At least I didn't miss. Did I miss that? I mean, they might have said it on the call. I think this will be later though. Like he didn't say to J.P. Morgan. I don't think they. I think they would have made it a big deal, and they would have been more precise. What did they say exactly? How did they say it? They said it was early 2024. So that usually is between like it depends, right? Because the early could be the first half, or it could be like the first 3 months, or it could be like the first 2 months. I'm gonna go ahead and guess it'll probably be around like yeah, I don't know, April 1st something. So I'll give it 3 months, maybe a little bit less, maybe mid March. So that's my guess. I'll keep an eye on it. I want to see how this data is. If the data is good, then I think that it could be. I would raise my estimate. Like let's say it's a yeah, like I said, it's a smash. If it's a real smash, maybe even 25%. I just think that that's the main. You can adjust it. I'm gonna adjust it like this discount rate and stuff. And you can kind of see how that changes it. So yeah, like I said, the key is we're not really just look at the actual, take this number as the truth, but you want to just see what happens to this number as you change stuff around. And then that will genuinely give you a good idea. So like if you expect this drug is gonna work, or if you don't expect this one is gonna work. I just think it's fairly valued. I'm not gonna go. Maybe I'm saying it's a little bit higher valued. I'm giving the platform 100 million, just their expertise, and they have a couple of preclinical, I think. These two ones. I mean, that's pretty generous of them too. So I'm giving them 100 mil for this, and I still don't see sort of the value. So I think I'm good with this one. I'm gonna finish up, but hopefully you learned something. If you enjoyed it, let me know. I kind of like doing these videos, so let me know if you want more, for sure. Smash that like and subscribe if you do. Really helps me out. Yeah, thanks. Hope you have a good day. See you.